Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this Specialist Trading educational presentation. And today I'm going to be revealing how to identify consistent trades that last only 3 to 5 days. Now think of it. How would you like to be able to catch either a stock that jumps up to the upside in a couple of days or gaps down and you're on the short side, as opposed to holding a position overnight? Now, someone would say, well, Steve, holding a position overnight is actually rather good. You have the potential to capture these large gains of these long trends that have lasted a while. Well, that's correct. The only problem is when you start to get into these volatile markets, as we're currently experiencing, you may give back a lot of those gains, and a lot of times you may have a little bit of difficulty sleeping at night worrying about these overnight positions. For example, in this chart of the spiders, let's say that sometimes in the middle of May, you were interested in purchasing the spiders, but you said, you know what, I'm going to buy the calls, or maybe I'm going to actually buy the stock once we break above this so-called resistance right here. So the next day, we actually do break above it, so you decide to jump in and buy. And for the last couple of weeks, you're doing very well. 2 or 3 weeks, you've got a really nice profit. And so this is the way most people invest. They'll hold a position overnight and hold on to these long gains, or hopefully they'll have these long trending moves. But then all of a sudden, things like this may happen. As you can see, this happened actually just a week or so ago where the market fell out of bed, I believe thousands of points, and you would have given back all of your gains in just a couple of days. Now, here's the difference when you're looking to capture these quick and consistent trades that last anywhere from 3 to 5 days. For example, you would have been able to identify this signal in BBY on the 14th of May, and in 2 days could have captured 10 points and moved on to the next one and then the next one. This way you don't have a lot of exposure, and this way you're kind of just grabbing that low-hanging fruit. Well, this is what we're going to be talking about today. This is something that you could complement your current investment plan or just solely trade this way. A lot of traders just like to get in and out rather quickly, and this method I'm going to be sharing with you today does this perfectly. So welcome to today's presentation. My name is Stephen Primo. I'm the president and founder of Specialist Trading. And as I'm sure you've known before by attending my webinars, our only goal as a company is simply to educate you, because we are first and foremost an educational company. I often state, if you've come to my webinars thinking I'm going to tell you what to buy or sell, or what the perfect market is, or what I think the market's going to be doing in the next day or week, you come to the wrong place, because not only do we not do that, we don't believe in that. We should never actually forecast or tell traders what we think of the market, because we really have no idea. Our job is simply to pinpoint high probability setups that I've accumulated in my 43 years of trading. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. So I made markets in roughly about 60 stocks during the crash of '87 and the bull market that followed. So I traded straight up, straight down markets, sideways markets, any system, any method you can think of, I've most likely traded it. So I know what works in terms of consistency, and I know what doesn't. So why waste your time searching for that holy grail when it really is right here in front of you, and it's sound fundamental education? Because education is the one thing that will sustain you, not some fly-by-night system that promises the world and sure, maybe has a couple of good trades and gives everything back. What will sustain you so that you can be not just trading a couple of good months, but maybe a couple of good decades, is sound fundamental education that has stood the test of time. And that's our goal. That is the service we provide at Specialist Trading. And you'll see that today with me sharing with you one of our most consistent methods for capturing these short, quick gains. But before we begin, once again, as always, we are first required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of slides today using this particular method. But please remember that we can in no way guarantee that any of the performance results displayed today will be repeated in the future. And please remember that all examples are strictly for educational purposes only. Now, once again, if you're new to our webinars, please feel free to follow us on Twitter. I post this slide every week because there's a lot of great free information I post on a daily basis, a lot of signals that our strategies have generated and some explanations on why they did that. And also, we have some daily financial little bits of wisdom that accumulated along the way that will help you with your trading. So lots of great free educational information. So please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are different from other webinars you may have attended because we are first and foremost an educational company. That's our sole purpose, simply to educate you. Unfortunately, most people think that, well, they're going to come here today and find out what to buy or what to sell or what the market's going to be doing. Remember, our goal as an educator is not to force feed you signals. It's not to tell you what our opinion is of the market. It's not to tell you what we think is going to be the next big thing. Our goal is simply to teach you how to trade with a specialist edge. When I was first trading some 4 decades ago, I struggled tremendously on the floor of the Pacific Stock Exchange, even with, at that time, advanced information. I was trading with the institutions. I had roughly about $2 million to work with comparable now would be about maybe $500,000 or so-called, I guess, close to a $250,000 or more than that. Also, I was able to see what the orders were in my book, so I had a lot of great perks trading on the floor. The only trouble was I couldn't make a dime. It was very difficult, and on top of that, I was doing everything I had been taught. I was looking at the fundamental news. I looked and see what all the earnings reports were and all the stocks I was trading. I listened to the so-called trading gurus. I knew where all the support and resistance, so-called support and resistance were. I looked at all the Fibonacci retracements. I had all the Elliott wave settings, okay? Guess what? Nothing worked. And I was doing it all according to plan, and nothing worked. The reason why my mentors taught me was because there's no consistency in those methods. And so what they did was teach me the things that really worked over time. This is the specialist edge. And this is what has sustained me now for 43 years. And this is what I teach all my students around the world in over 115 countries and in virtually every state in the United States. So hopefully this edge will sustain you the way it sustained me. And you'll be able to trade not just a couple of good months, but hopefully 2, 3, 4, maybe even 5 decades down the road. Okay, now, since this is going to be a class today, please ask me as many questions as you like, but we're not going to stop at every slide because we don't want to take all of your day here. So what we're going to be doing is take all the questions at the end. So if you're new to my webinars, please wait till the end of today's class, probably in the next half hour, and then we'll reserve the last portion for any questions you may have, okay? All right, with that stated, let's begin today's class. Now, I want to share with you what my mentors taught me about successful trading, because at that time, I thought, well, successful trading means that you make a lot of money, right? Well, in all actuality, no, that's the result of successful trading. But what actually is successful trading? Well, successful trading should be non-subjective. So what do we mean by that? Well, think of it. I usually see this with a lot of students that are new to my trading and that I teach and mentor. And usually what happens is you get 2 students and you have them look at a chart and they'll come up with 2 entirely different scenarios, 2 entirely different ways to trade it. All right? Trading shouldn't be like that. Trading should be cut and dry. It should be black and white. 2 traders should look at the same chart and come up with the same scenario, whether they're going to be buying or whether they're going to be a seller, whether they are going to be entering or looking for a high probability setup at an area right here, or whether there is no high probability setup available. They should all be coming up with the same plan. Now, it doesn't mean you have to execute the plan the same way, but you should come up with the same concept, the same bias when looking at a chart. Think of it. If you look at Fibonacci retracements, if you look at Elliott wave, those things are tremendously subjective, all right? You look at support and resistance. One trader's support is another trader's resistance. That's why we don't teach any of those methods, because they're too subjective. They're not cut and dry, and everyone comes up with a different summation. We want things to be more black and white. Now, successful trading, according to my mentors, should also be consistent. Now, here's where beginning traders have difficulty, because they say, once again, well, consistent means that, Steve, you have a lot of winners, right? Well, that's great, but no, that's not what consistent means. Consistency is an awareness of losses. You see, every consistent method is aware that they will have losses from time to time, and that's okay. But a consistent method is able to recoup those losses. What I say all the time is consistency is a 2-step forward, 1-step back approach. The 1 step back is those losses that will occur from time to time, but you want to be able to recoup those losses and then go forward in your profit and loss. That's the 2-step forward, 1 step back. So when we say our methods are consistent, what we're saying is we know you'll have losses from time to time. That's okay. but you'll feel confident once you research and understand how to apply the process that you'll be able to most likely recoup those losses sooner than later. Now, successful trading should also be as simple as possible. Now, think of it. If you've taken classes before, let's say like most of our new students, they've told us they spend a good $10,000, some even $20,000 on other classes, and they couldn't understand one thing that was going on. Now, maybe you've fit into that category. I know when I was struggling, I did. Most traders who've been trading for a relatively short time, which are 5 to 10 years, have a lot of convoluted logic in their trading plans, have a lot of requirements, a lot of rules, a lot of indicators, a lot of things that you don't really fully understand what they're based off of. And that's what makes a pretty, I would say someone who hasn't traded a long time, a very inconsistent type of trading plan. But the traders who are consistent are usually the ones that have been around for a long time, 30, 40, 50 years, and their trading plans are extremely simple, maybe 3 to 4, maybe 5 rules at tops. That's what sustains you, simplicity, not overcomplicating things, okay? So keep things as simple as possible, and you'll get onto that road to consistency. All of our methods are extremely simple. In fact, the strategy I'm going to be talking about today only has 2 rules. I can't really go into detail. I'll share with you one of the basic formats of being able to trade it, but I can't go into the rules because most likely if I did give you even one of the rules, you would be able to reverse engineer it and figure out how to trade this. So I can't really share with you a lot of the rules because it is entirely simple. But lastly, here's the most important function of successful trading. It should make you a part of the process. So what does that mean? Well, all of our methods are not systems, they are strategies. So what's the difference? A system requires every trader to trade the same way every time. Once a signal has been generated, you all enter at the same place, you all exit at the same place, you all place your stop at the same place, you have the same money management, you all buy the same amount of shares, same amount of contracts, whatever you're trading. And that's how traders come up with statistics. That's how you come up with numbers to run to see what the performance is, all right? We do things differently at Specialist Trading. We do not teach nor do we trade systems. We only teach and trade strategies. So what's the difference? Well, a strategy is still rule-based, but only about 70% rule-based. The last 30% is allowed for discretion. I know a lot of you are saying, well, wait a minute, Steve, I thought you said we're supposed to be non-subjective. I thought it's supposed to be all cut and dry. Well, it is. In terms of finding the high probability areas, you should all know that, and it shouldn't change from one trader to the next. But how you enter, how you exit, how you place your stop, how you monitor the trade should be allowed up to your own discretion. In other words, let's say you're a very aggressive trader. Let's say you like to, trade a lot and go for the big hits. Well, you may give yourself a lot more risk. Whereas someone else may say, I'm not a very aggressive trader. In fact, I'm very conservative. I don't like to take a lot of risk. Well, that's going to change the way you place your stop. It's going to change the way how long you're in the trade. It's also going to change the way to see whether you protect the trade. Do you get out quickly with a quick profit, or do you monitor it as it's progressing in your favor? Now, you still took the same signal, right? You still entered the same stock or the same future. You still went long at the same buy area. But maybe you entered at totally different places. Maybe you exited totally different places. This is why we encourage all traders to trade differently. This is why we say no two traders should ever trade alike, because that's a recipe for disaster. If you go to a chat room or a trading room and you try to mimic what someone else is doing, most likely you're going to lose money. Why? Because it's not coming from you. It's not a part of your process. You're following someone else's process. So you have to be a part of the process and use that 30% discretion to make your own decisions. Okay? You cannot simply buy or sell the way someone else does. Trust me, I know what that's like. When I first studied with my mentors, I used to say the same thing. I would say, why can't I just buy where you buy and piggyback along on your trades? They said, because you're not a part of the process. You're doing what we do. And then one day when we're not here, you're not going to understand how to trade. So you have to realize what type of trader you are. You have to do some soul searching and see, am I aggressive? Am I conservative? Do I like to trade a lot of times? Do I like to only trade once a month? This all goes into making a part of the process. And this is what will make you a consistent, successful trader. Not simply doing the easy thing and copying what someone else is doing. Because you know what you're really saying to the markets when you take yourself out of the game like that? You're basically saying to the markets, I don't know what to do. I'm not skilled enough. I don't have enough experience. I haven't been trading long enough. I don't have an education in trading. I didn't go to business school. And I don't know what to do, so I'll let you do it for me. Okay, I'll go to that chat room. I'll let you decide what I should buy or sell. Or I'll get that signal service, and they'll tell me where to buy or where to sell. Or I'll watch that guy on TV, and he'll tell me what he likes to buy or what to sell. Or I'll follow some convoluted indicators, and they spit out where to buy or sell. When you do that, you're telling the markets, I have no idea what I'm doing. In fact, I'm not skilled enough or experienced enough to know, so I'll let you decide. And in my opinion, that, is a recipe for failure. You should always be a part of the process. What we teach you are high probability areas for trading, but how you enter, how you exit, how you place your stop is entirely up to you. But the good news is we fill that gap as well. We give you upwards of 7 different exit points, 7 different entries, 7 different stop placements, and you can pick and choose which one makes you feel the most comfortable. So this is how you become a successful trader. Not by going to a webinar and saying, well, I'm going to let this guy tell me what to buy or sell, or I'm going to find out what he thinks of the market. You should never do that. You should find out and learn and then never have to rely on what someone else thinks of the market. You should know exactly by looking at a chart what you think of the market. Okay? This is our goal as your mentor, to teach you so that you can be in charge of your own trading destiny for the very first time. All right, so let's talk about the strategy that can have you in trades for 3 to 5 days with some really nice consistent results. This is strategy number 8. All right. I often say that this is our most overlooked strategy. All right. It is really a gem, but probably overlooked because it's not a very flashy stock. Very simple. And unfortunately, it just really works the best on stocks. Sure, you can apply it to other markets and other time frames, and it does well with them, but you get the best results I've seen in my experience with trading this with stocks. So some of the highlights of this particular method, once again, it's a stock-only strategy. Now, we have traders who say, Steve, I use this on the futures. It works great. Or I use this on Bitcoin. It works fantastic. That's great. Okay? Remember, we don't have statistics. So if you feel you want to use it in other markets, that's fine. But it's been my experience of trading this for a number of years that it works the best in stocks. Now, it's an indicator-based method. As you've seen in the past, we've talked about other methods such as strategy 4. Strategy 4 is a pattern recognition strategy, okay? We have other methods that are pullback strategies. We have other indicator-based strategies. Well, this is simply an indicator-based method. It often shows the capability to catch these big moves that last 3 to 5 days, okay? So this is what's the beauty of this particular method. So because of these short, quick moves, it's ideal for option timing. If you're an option trader and you want to get in and out where you don't want to pay high for these premiums, but you want these big, quick moves where they don't take up a lot of your time and they don't have a lot of time decay, this is perfect for trading options, okay? Now, it works best in daily bars of stocks as well as higher time frames. Now, remember, when we say stocks, you can also apply this to ETFs. You can also apply this to weekly bars, but I've seen the best results just from my experience. Remember, there's no back testing in specialist trading, but just from my point of view, it works the best in daily bars. Now, you can apply this to any direction. So whether you like to go long or go short, makes no difference. You can buy puts, you can buy calls, some spreads with a bias to the up or downsides. It's up to you, or you can actually purchase the stock. Once again, the only requirement we have with all of our students coming in is that they must paper trade first. This is not in any way a course where we say, well, go ahead and start trading the minute you get it. No, because most people don't get any of our methods right off the bat. Most people jump in too quickly, and mostly they lose right off the bat because they didn't study the strategy, they didn't paper trade, they didn't practice. Think of it, any career, any endeavor that you do in life requires some type of practice, okay? Some type of rehearsal. Any actor or actress goes through rehearsal before filming, before they go on stage. Any athlete goes through some type of practice before the games start, before they actually compete. It's no different from trading, but for some reason, traders think, well, gosh, I got it. I'm going to go right in and play in the big leagues. You have to rehearse. You have to practice. We call this paper trading, all right? So you must paper trade for however long as you see fit, all right? So that for some traders, that may be a couple of days. Other traders, it may be a couple of weeks. Other traders, may be a couple of months, all right? I have paper traded for months at a time. So people are required at specialist trading to always paper trade. Now remember, all of our methods, all of our strategies, including strategy number 8, are extremely consistent. Once again, consistency does not mean that we have tons of winners, although you may find that from time to time. But consistency means that you will have losses. That is entirely admissible. A consistent method is one that has the capability to recoup those losses. So that's what we're looking for, a consistent method. All right. Now, let's look at some examples of strategy number 8. Remember, once again, I'm sorry. One of the reasons why we don't do a lot of strategy number 8 webinars is because I always like to give traders a few rules or teach them a little bit about the inner workings and the process of methodology that we have. Unfortunately, I can't do that once again because it only has 2 rules. Here is one of the basic tenets for establishing a format, and I will share that with you. And that is, if we are trading this on our chart, our PTS Primo charting platform, this teaches you how to identify these 3 to 5 day setups. And all the examples you're going to be seeing today are generated from using our platform. And one of the things we always teach you on the platform is to always apply our buy-sell line. Now, what exactly is the buy-sell line? The buy-sell line is the 50-period simple moving average. So if we have a setup according to these 2 rules, and if it's above the 50-period moving average, it can only be a buy setup. And if that same setup is below the 50-period moving average, it can only be a sell setup. So I'll share that with you, okay? So remember, any buys that you'll see right here, even if we don't have it plotted on the display, it has to be above the 50. That is one of the basic formats for any strategy number 8 buy signal. All right, so let's look at this example here in COP. This was on June 1st. And once again, if you have any questions, please wait till the very end of class to ask. I promise I'll get to them in the next 15, 20 minutes. The only question I will answer right now is the most common. Most traders say, Steve, is this going to be recorded because I have to leave in like 5 minutes, or I can't hear or see everything clearly? Yes, you'll all receive a link to this recording at the end of today, okay? Okay, COP. Doesn't look like much is happening here. In fact, we're drifting lower, but we are above the 50, even though it's not plotted. And here's the process you would go through on our platform. So remember, this is an online class, so you will learn all the rules. We don't teach systems where everything is, just basically already done for you and you have no say. You just have to, follow the up and down arrows. No, we teach you what the method is based off of. You know all of the rules going in. You have to study, rehearse, and paper trade for a while. So let's say you're paper trading and you're saying, well, I think, according to what I've been studying and researching for the last week, there's a buy signal here. In order to check your work on our educational platform, what you do is go to the educational green strategy tab right here, check out strategy number 8 right here, click it on, and in the drop-down menu that will appear, just click on signal arrows. This will tell you if you're in line with spotting and identifying a valid signal. So let's say you had thought it was right here on this bar. You're correct. You'll see the up arrow there. Now, look what happened in the next week, the next 5 days. The stock went up 7 points. Now, I know a lot of you would say, well, Steve, I thought these were going to be these big moves here in 5 days. Well, think of it. This is not a very expensive stock. And 7 points translated onto 17% price gain in 5 days. Now, think of it. What if you had Amazon? How would you like to have a price gain of 17% of Amazon in 5 days, or Tesla, okay, or Google? This is just an example of sharing with you that it doesn't have to always be about points. Now, let's look at another example here. This is in BBY. This was coming into the mid-May. Once again, it doesn't look like much is happening here, but according to your studies, you think you see another buy signal. To check your work and to use our educational platform, you click on Strategy 8. In the drop-down menu, click on Signal Arrows, and you are right. That is a valid buy setup. Had you taken that setup, 10 points in 2 days. You see how option traders love this strategy? Because even though it's not guaranteed, even though it's not promised, many times strategy number 8 is able to identify these 3 to 5 day quick moves. And this is perfect for trading with options, for calls, for puts, or even if you have the stop. This is why we say if you're frightened about the volatility where the market's up, 500 points one day and then down 1,000 the next, it's nice to be in these quick, short setups so that you don't have to worry about, holding positions that long overnight. Microsoft, okay? This was coming on the 5th of May. This was just a week or so ago. The 5th of June, I should say. I'm sorry. A buy signal was generated. 10 points in 3 days. Not a bad little gain there as well. As you look at ramp, now this is the way most traders trade, myself included when I first started. I'd look at a chart like this, and this is what we mean by things are too subjective, how we're taught the wrong things when we first start to trade, and this is what gets in our way. Most people, myself included, would have looked at this chart and said, well, this is a sideways market right here. There must be overhead resistance and underlying support. So what this means is you're going to be in this range, and every time you want to buy, thinking it's going to break out, it sells off, and every time you sell, thinking it's going to break down, it goes back up. So it's best to stay away from these sideways ranging market. This is where you get whipsawed, right? Well, there's really no consistency in looking at markets like this. If you learn the rules to this strategy, it actually would have generated within that range a buy signal. So you wouldn't have had to even consider any range, any whipsaws. And looking at ramp, the stock went up 12 points in the next week. Now, unfortunately, this took 6 days to make 12 points. So this goes against the title of today's presentation. In 3 to 5 days, you got to give us one more day on top of this. But a nice 12-point gain in just 6 days. How about ECL? All right, here's another example. This was in the middle of May. As we can see here, a buy signal was generated, 12 points in 1 day, okay? Had you purchased, let's say on the close of this bar, you potentially could have captured 12 points. Now remember, this is not saying you would have exited and made 12 points. Maybe you wanted to stay in longer. Maybe you wanted to get out with a quick 5-point gain. It's entirely up to you. Now, here's something I want to touch on, and I'll touch on it a little bit more in depth at the end of today's presentation. But this is one of the basic reasons why you don't want to hold positions overnight in a volatile market, because here's a strategy number 8, buy signal at the very beginning of June in RL. And in the next 4 days, you could have potentially captured 15 points. And then look what happened. Had you held on to that position, you would have given all that profit back. And if you continue to hold on, you most likely would have turned that win into a loss. Well, here's what I'm going to be talking about later on. I'm going to be sharing with you some examples of how you could have actually exited with a 15-point gain. Okay? Here's another example in SNA. Doesn't look like much is happening in the stock, but a buy signal was generated on the 2nd of June. 23 points you could have potentially captured in the next 4 days. As we look at beyond, here's what is along the same lines of what I'll be going into detail at the end of today's presentation. In beyond, a buy signal was generated at the beginning of June, and in the next week, you could have potentially captured 25 points. All right? But then look what happened. All right? Price sold off, and if you held on for another 3 days, you most likely would have given away all of your profit. So I will share with you a technique where you could have actually exited right around here. Let's look at GS, Goldman Sachs. Okay, this was in mid to end of May. Another buy signal was generated using the strategy number 8. Just 2 rules. Okay, we're above the 50-period moving average, and then there are 2 more rules on top of that. 30 points in the next week. Okay, once again, this would have taken 1, 2, 3, 4, 5, 6 days. So after, let's say, after 5 days, you could have potentially captured 15 to 20 points. Well, if you held out 1 more day, you could have captured 30. Okay, so sometimes it's a little bit longer than 5 days. Now, how about this example? This is a VISL. This is just an example to share with you that this works just as well for inexpensive stocks. If you look at the right-hand corner here of the axis, this is a fractional stock. This is less than 30 cents at the time. I believe you could have purchased this at 20, 25 cents. A buy signal was generated at the end of May, May 29. As we see here, the stock went up 400% in 4 days. In 4 days, it was up to, it had touched $1.50 from 25 cents. So that's 400% in 4 days. So when you trade these inexpensive stocks, such as these penny stocks, sometimes it's not so much about how many points you make, but it's your percentage gain. So this is tremendous. You could have bought thousands of shares of this for 25 cents and potentially captured anywhere 200, 300, 400%. As we look at ARGX, we see here, once again, here is an expensive stock, but another buy signal was generated at the beginning of June here. And in 6 days, the stock gained 80 points. Now, sure, you could have exited on the first day right here where you had a nice big upside move, and you could have done that in a big gap up, or continue to hold on for some more big gains here. Now, these have all been buy setups that have happened recently in the last month to week or so. Let's look at some sell indications here that happen. Now, price is now below the 50-period moving average. Okay, that's the one qualifier. Remember, to have buy signals, they must be above the 50. To have sell signals, they must now be below the 50. So all the setups you're going to be seeing now are setups below the 50, and that's the first qualifier, and then the two rules come into play after that, okay? Now, some of these are going to be older examples because we've all known the market has been, of late, the last month or so, been going straight up. So most of these are a month or so later in the time frame because we had to kind of look far for these sell setups, but they do happen. This was in the beginning of March. As we see here, it looks like the price of the stock in CDNS is going sideways to higher, but going through the process, once again, if you want to check your work, click on strategy number 8, click on signal arrows in the drop-down menu, and we can see here that even though we've been going higher, this is a sell signal. So it's up to you whether you wanted to take this. If you wanted to take it, there are many ways to get in. You could have entered on the close or look for confirmation below. It's entirely up to you. But even so, you would have potentially been able to capture 10 points in the next 2 days. As we look at HOLX, here's an example of where we say it's entirely up to you, because had you shorted the stock, well, you had a nice 7-point gain in 5 days. But remember, the rules don't state that you have to get out at 5 days or less. That's just showing you that in 5 days, usually strategy number 8 setups have some nice gains. But if you wanted to stay in longer, we have methods to share with you that we teach you in the course how to stay in longer. Because if you stayed in a little bit longer, well, guess what? You could have potentially turned that 7-point gain into potentially 20-point gain. So remember, once again, there are no statistics, there are no win-loss results here, because everyone trades differently. Someone might have taken a nice quick 5-point gain and said thank you. Someone else may have waited for 20 points. It's entirely up to you, and we encourage you to trade according to your own means. As we look at DE, once again, most traders would say, Steve, this is a range market. I'm not going to trade a range market. If I buy, it'll go straight down. If I sell, it'll go straight up. Well, once again, there's no such thing as a range market, really. What we're looking for are high probability setups. That's all we're interested in. Strategy number 8 would have identified a sell setup right here. How you choose to enter is entirely up to you. You have upwards of 7 different ways to enter. Either way, you could have potentially captured 15 points in 3 days. Here's an example in LH. Someone would say, well, Steve, I'm only looking at 3 bars here. There's no way to get an idea of what the stock's going to do. Actually, there really is, because according to the rules, it's so simple. You could have seen that a sell signal was generated right before April, and potentially you could have captured 15 points in the next 3 days. As you look at URI, once again, someone would say, well, gosh, we're just kind of going sideways here, but strategy number 8 generated a sell signal here. This was in February, well before the market started to fall out of bed. 20 points in 3 days that you could have captured. Now, remember, this is not saying that you have to get out in 3 to 5 days. It's just saying that if you're the type of trader that doesn't want to hold on to position and stay in a position for a long time overnight, this is a perfect method for you. If you're the type of trader that likes to buy calls or buy puts, this is an ideal method for you as well. Here's an example in Apple. This is going back to March. A sell signal was generated when the stock looked like as if it's going just sideways. There's really no reason to sell it, but you could have potentially captured 30 points in 2 days. Another example in AAP, all right? Looks like a sideways market, right? A sell signal was generated using the 2 simple rules. This was in March, 45 points in the next 5 days. Now, we're not saying that our other strategies don't capture that amount of points or that direction, but remember, this is designed to do it very quickly. It only looks for those setups where you can capture these very quickly. A lot of our strategies can generate profits of 45, 50, 60, 70 points, but maybe it takes a while longer, where it takes a good month or 2 to get those type of gains. Well, if you don't want to be holding positions overnight, you'd like to potentially be able to capture those, even though there's not promise, there's no guarantee, But this is the strategy that looks for those quick, consistent gains. In the MLM, once again, we're kind of headed higher to going sideways. A sell signal was generated in March, 50 points in 4 days. Where strategy number 4 may have generated a signal that potentially captured 50 points in about a month, strategy number 8 was able to identify it as setup in 4 days, okay? All right, so let's recap before we go into the question and answer portion. Remember, strategy number 8 is primarily a stock strategy. You can apply it to other, markets. Students have emailed me examples and said, Steve, it works great in this market in this time frame, but it's been my experience that it works the best. You'll get the best results in daily bars or higher for stocks only, okay? It's an indicator-based method based on 2 rules and their relationship to each other. It often shows, because of this, the capability to catch these big moves. This makes it ideal for option timing or for traders who just don't want to hold positions for a long time. They don't want the exposure, all right? Works best in daily bars and higher time frames. You can apply it to any direction. Remember, all students who decide to become students of this course are required to paper trade first. There is a high level of consistency in this method, as with all of our methods, but consistency means you have an awareness that there will be losses from time to time. A consistent method is one that's able to recoup those losses. Now, ask yourself, do you think this strategy can help your trading for the remainder of the year? If you're the type of trader who doesn't like a lot of exposure, all right, when we start to get into these volatile markets again, and they will come, are you frightened of holding positions overnight? Does it stop you from trading? This is a great method to have if you don't want to have that much exposure overnight. You want to be in a trade 3 to 5, maybe 6 days. This is a great method to have in your arsenal, where you can hold maybe positions overnight and then subsequently have these on the side as a hedge for those short-term trades. All right, so if you fall into this category, we have a great discount for all the attendees today. Obviously, we're going to offer you strategy number 8, the entire course, video instruction, detailed video instruction with all the different entries, all the different exit points, all the different stop placements, the add-ons for the platforms. If you decide to trade on TradeStation, if you want to trade on NinjaTrader or MetaStock, you'll get all the complete strategy rules, but we're also going to throw in a special bonus, okay? You saw how simple it was on our platform to actually execute this and to check your work, to use this as an educational tool. Well, because of this, we're going to throw in 12 months of the PTS Primo platform for free, okay? We specifically designed this, Pro Trader Strategies and myself, we designed this to make trading simple, to make checking your work simple, to educate you, just as if you had your mentor sitting there with you, alongside with you all the time, okay? Let me share with you what else you get on the platform, because not only are you going to get strategy number 8, you're going to get our buy-sell line feature that comes with 4 different categories for determining whether you are above or below the buy-sell line, okay? You're also going to get our top-bottom 25% tool. This is a way to determine through pattern recognition whether you're in a short-term trend or not, okay? You'll get our signal scanner, where you can scan for strategy number 8 signals on a nightly basis. You'll get our strength of trend tool. I was talking with a student of ours who loved this tool yesterday, who said that they use it to determine when most of the trends run out of gas or not, or if there's still momentum left in a trend or not. It's great to determine, and you can get a great idea whether the market's running out of steam or it's going to continue upward. But here's what I wanted to discuss, and I talked about earlier today, are auto-generated exit levels, okay? Because, you know, we've all seen through volatility, even though in 3 to 5 days you'll get a nice profit, a nice gain, a lot of times with the volatility, those can be erased in a couple of days, the way we saw. That's why we have on the platform our auto-generated exit levels. This is just one of the methods, many methods we teach you in the course, but we've automated it on our platform so that you'll see automatically where these exit levels are, okay? For example, let's look at this chart right here. This was an actual example here in the beginning of June in AYI. A buy signal was generated using strategy number 8. Now remember, in order to check your work, we always stress that our students go up to the buy-sell strategy tab here and click on strategy number 8, because you would have seen that a signal was generated, and guess what? You had a really nice profit. But what comes with many times with these profits is that the volatility will erase them in a matter of days. So here's how the platform can educate you. Remember, we said all you have to do is simply click on strategy number 8 and the drop-down menu will appear. Now here's how you find out whether you're in line with a valid signal by clicking on signal arrows. But here is the exits, okay? Remember, it's just one of the methods we teach you, but we've automated it. All you have to do is click on range extension exits and they automatically appear. Now you will see this appear prior to even getting into the trade. You would have seen it appear on this day. So we would have known in advance where these exit levels were. Using this method, you could have exited here with a profit, here with a profit, and then ultimately here. Some of our students like to exit a portion of their profit and then move their stop to unchanged. So this way, if it does turn around, well, guess what? You have a portion of your position has exited with a profit, and then you break even on the rest. Still others will say, well, listen, once we get up to this level, I'll move my stop to unchanged. Once we get up to this level, I'll move my stop to this level of exit. And once we get up to the third level, either I'll move the stop up or I'll exit everything. Now, let's say you decided to exit everything at the third exit. Well, had you had an open order there, well, you would have exited on the opening since we gapped up from the previous day, and you would have exited right here for a profit of potentially 23 points. And the next day, you would have missed all this sell-off. This is all on our platform. All you have to do is go up to the strategy number 8 tab, click on the drop-down menu, click on exits, and you'll see these exit levels automatically generated. So you'll know this prior to even getting into the trade where these exit levels are. This is a great perk you have on our platform. You'll only find it on the PTS Primo charting platform. And with all of this on our platform, you'll also get personalized tech support with any issue, with any problem you're experiencing. Maybe you don't know how to load a chart. Maybe you're not sure where to get the scans. We will answer this issue and any other issue in a matter of moments with our great tech support. Okay, we have great testimonials about our tech support. So let's break it down. Okay, you're going to get the strategy number 8 course, all the complete rules, the entries, exits, stop placements. This also comes, by the way, with educational correspondence. You'll have my personal email address where you can email me whenever you'd like for any questions to answer about how to trade the strategy number 8 or some of the rules that are included with this, okay? Now, you're also going to get a full year of the PTS Primo charting platform. Think of that, a full year with all these extra perks included on the platform. So strategy number 8 included with 1 year of the platform, okay? Remember, this is the stock strategy you can't afford to overlook because it really is able to capture a lot of these big moves. Now, let's break it down. If we break down the price, I have bad news and I have good news, all right? Here's the bad news. The bad news is strategy number 8 course, because it is such a great course, it's so consistent, will soon be costing roughly close to $4,000. That's just for the course. If we include the price of 1 year of the platform, we're talking over $5,000, okay? So this is expensive. We realize this, but it's worth this because of all the trading examples we shared with you. A lot of our students are doing very well trading strategy number 8. So we're increasing the price. But guess what? You're going to get a great discount today because we're not going to even charge you $39.95. What we're going to charge you is $29.95, and we're going to waive the price of the platform, as we said. So you're going to only be charged $29.95. You're going to save $1,000 right off the bat. And on top of that, we are including payment plans. So even if you can't come up with $29.95 for a small deposit, you can still be up and running as soon as today. You can still be getting those strategy number 8 signals, studying the course rules, and learning how to trade it as soon as today if you'd like. You can just put down a small deposit, and you can be up and running. Now remember, this is a great strategy. Let's look and see what happened just this past week. If you had applied this to U1, okay, U1, that's U-O-N-E. I don't trade this, but one of our students did, and they shared with us this signal that was generated on the 12th, okay? This was just this past week. On the 12th, in this inexpensive $2 stock, a buy signal was generated using strategy number 8. You could have decided to get into the stock at roughly $2. The stock went up to 40 in the next 2 days. This was a valid strategy number 8 signal that you could have taken potential of and potentially captured 38 points in just 2 days, okay? So this is what we mean when we say the price is going up because it's worth its weight in gold. And you can't afford to overlook this stock strategy. It's really one of our most overlooked strategies, but it really is really a gem because it works so well. So here's how to take advantage of this great offer. Remember, even if you can't come up with $29.95, you can still work with the people at Pro Trader Strategies to put together a payment plan. They can structure a payment plan so for a small deposit, you can still be up and running. Therefore, I would strongly suggest calling the trading consultants at Pro Trader Strategies right now. They're manning the phones. I would call them directly at area code 310-598-6677. And someone there can work with you and structure a payment plan so that for a small deposit, you can still be up and running as early as today. Now, this link you see at the very bottom will take you to the sign-up page. If you want to sign up online, you can do that, or it will give you a little bit more information. Now, that link has just been posted on the chat box in the GoToWebinar column because the link on the slide in front of you is not live, but they've posted a live link in the chat box. So all you have to do is click that one on, and it will take you to the information page. Or if you'd like, you can sign up online. But remember, I would really suggest there's absolutely no obligation giving Pro Trader Strategies a call. They have qualified trading consultants on the phone right now. They can answer any question you may have about price, about tech support, about putting together a payment plan, and they would be more than happy to work with you. They're very flexible. And remember, there is absolutely no obligation. They would just be happy to answer questions concerning price. Now, as I stated, I am here to answer any question you may have concerning what I went over today. So if you do have any questions concerning strategy number 8 or the class, please go to the question and answer section on the GoToWebinar column and type in your question, and I will answer it. Okay, let's see. There's a question right here. Does strategy number 8 show sell signals besides the buy signals? Yes, it does. Maybe you came in late, but I showed a good number of sell signals as well. Okay, so yes, it does show sell signals. In fact, the reason why there aren't a lot, the sell signals were roughly about 2 months ago because we've been basically going up. And remember, it is designed to be in sync with the overall trend. And the way we do that is with the first qualifier, and that's the 50-period moving average. So most of the examples you saw today that were recent are because price has been above the 50-period moving average. We will never short or get a sell signal in strategy number 8 if the price of the stock is above the 50. So most of the stocks in the Dow or S&P are above the 50 right now. Now, once we start to get a little sell-off and price starts to go below, you'll see a lot more sell signals as well, okay? So you're going to get both buy and both sells. Now, someone must have come in late. They're asking if you can put options. Yes, but remember, we are not an option class. So you will have to come up with your own means on how you define where you're going to enter, where you're going to exit, what option you'll buy, what class in terms of how far out in terms of time, or what strike price. That's entirely up to you. We never tell anybody that you have to buy only stock or you have to purchase options only. It's up to you. Remember, you're in charge. What we're just simply doing as an educator is highlighting or pinpointing these high probability areas. But in terms of how you want to enter, if you want to buy a call or a put, that's fine. That's entirely up to you. All we're stating is that if you are an option trader, this class is perfect for this because this course, as you saw here, not guaranteed, but oftentimes will show these really quick 3 to 5 day big potential winners. So that's what we're interested in. If you're an option trader, you don't want to be holding a position for, in an option for over a month and just see, even though it's going in your direction because of the time decay, you're just losing a lot of that profit. A lot of these winners, once again, not guaranteed, but we've seen a lot more with any other strategy we have happen in 3 to 5 days, okay? Someone's asking, do you get both slides on the same, or I should say both buy and sells on the same slide? No, because if price is above, you're only going to be seeing buy signals. If price is below, you're only going to be seeing sell signals. And so most of these slides were either above or they were either below, okay? This is, one of the first things we teach to all of our students in our course is that to have a higher level of consistency, you should be in sync with our buy-sell line. The buy-sell line is a 50-period moving average. And we call it buy-sell line because it tells you whether you should have a buyer's bias or a seller's bias, okay? So this will automatically give you a higher level of consistency, regardless of what method you trade. So In order to check this, go back and check your last 5 to 10 trades. If you had some losses, most likely it was because you were buying below the 50-period moving average and you were selling above. And most traders, they'll go back and do the research and they'll go, wow, you're right, this does work. Most of my losses were because I was out of sync with the buy-sell line, and that's when they decide to become students of ours, okay? Someone's asking, how much is the PTS Primo platform after the first year? Usually the price is less than $100. I believe it's about $97 per month. But remember, that's always something you can negotiate with Pro Trader Strategies. They're very flexible. They'd be willing to work with you. And if you want to purchase another strategy, maybe they would be willing to throw in another free year. I'm not saying they will, but that's their part of the deal. We designed our companies so that I was entirely in charge of the teaching and the trading of our strategies. And what they were entirely in charge were the pricing, the discounting, and the tech support. So that's a question for them, but they're very flexible once again. I would highly recommend all of you giving them a call right now if you're interested in strategy number 8 and just discussing the different options you have in terms of price and the discounting and in terms of a payment plan. Remember, there's no obligation. If you don't want to purchase anything today, they will not force anything upon you. They'll just simply share with you the different options you have for strategy number 8. The only thing I would say is, don't sit on this, because remember, once again, the price will soon go up much higher. It'll be close to $5,000, $6,000 for a year of the platform and strategy number 8. So if you're really interested, don't sit on this longer than a week or so. Okay, you're all going to get a link to this recording today. Watch it and see if this is right for you. If it is, that's great. Call them up as soon as possible to secure this deal. Okay. As we close here, once again, I would highly recommend giving Pro Trader Strategies a call. They're not going to try to sell you anything. They would be answering any questions you may have under no obligation to buy anything, okay? As we take one last look at our disclaimer here, I want to thank you for taking time out of your Wednesday to join me today. I really wish you the best of luck in trading. I hope you learned a little bit about what we do and our concept and our philosophy about trading, but most especially, I look forward to all of you becoming students of mine in the strategy number 8 course. Thank you so much. Have a great day, and I shall see you next time. Bye-bye.